Alright, I'm going long here. Stop below the rejection block here. I'm going to be aiming for this area up here. So I had a stop hunt here, rallied up, returned back into a fair value gap. Short-term buy-side liquidity here, here, and here. You can see the old high, that's that level here. See if we can get some mud on the tires on this one today. I missed the short. Didn't give me my fill I was looking for. And the target area I was looking for. I'm not certain it would have given me my exit either if I would have had the short filled. Really tricky morning. If I wasn't already long, I'd be long now. So we had a stop hunt here after a nice run. Swing high taken here. You could use this swing high, or this swing high, depending upon how aggressive you are. Nonetheless, we have had displacement to the upside. Fair value gap in here. A little too rich for me to like it here, but this here I like it when it dropped down below. Yeah, I'll show you. I'll do an entry right there to show you that that would be a good entry as well. Again, my attention's up here. That's what we want to see. I want to see it sharply rally above this high here. That'd be a validation. See if we get that. Then it should be just a hop, skip, and a jump to here. And then accelerate for the buy side liquidity above the high this morning. Everybody want to go short. So they're going to punish those individuals now. And I aim to punish them with them. So I'm talking directly into my microphone on the laptop. I don't have a high dollar microphone attached to it. So to all of you out there like to criticize the sound and audio quality, suck it up. Alright, so let's trim some of this risk in here. There we are, that's what we're looking for. And just take one of them off there. Alright, so next area of interest is here and here. Okay, it can come down to this level here. That's permissible. I'd rather leave that area open. That being where we created the low here. I want to see that stay open. That would act as a breakaway gap. I want to see it overtake this high. Should it do that, the stop will go to here. I don't want to see it go into a losing position after taking out this high. And this one here, if it should do so. Already showing you the entry here. That's more or less the framework used for the ends model. So you'd already have your 5 1/4 points. what would be if you were filled at this price here, 39.65 and a quarter, that being here. If you were filled there on your one single contract, if you put a limit order at 3970.50, that would be your 5 and a quarter points. And so risk gets trimmed to there. The proverbial risk-free trade. Okay, we're drawing up into our target here. We'll try to peel one of them. Actually, let's do 3 above that level. So we're looking for 39.85. We'll look for that. Till we get 39.85, we'll peel off a lot of 3 contracts. Just hovering over top of the button here. Buttons are being pushed. 2022. Oh, you'll never do this. You'll never trade. There we go. There's that. And this proof train just keeps rolling on over. Lay down on the tracks, troll. Lay down on the tracks. It's going to beat you up over and over and over again. Alright, let's go down 2 contracts. We'll try to peel off 2 above. Let's aim for 39.89.50. This one here, make sure we got over 85. Yep, we got over 85 on that one. Okay, I have no interest in moving the stop loss up. I've already funded the trade 2 times. I'd like to see it support this candle's high here and still run up and get into this area here. Let's see it quickly turn into an up close candle or an expanding candle. Worst case scenario, it could drop down into this area here. I don't want to see that. I like to see it stay open. Remember I was saying down here, I like to see it act as a breakaway gap here, so leaving an area open. It has done so. We've taken out liquidity here, here, and we're just hovering right below that, right there. So we're in that area here now. That needs to be used to send it higher. $10.22, kind of late in the morning session. Leaving this high and this high here sets the stage for a potential retracement in London lunch. Oh, not London lunch, I'm sorry, New York lunch. Stuck in the FX model. Alright, so we got consequent encroachment of this buy side imbalance, sell side inefficiency. Don't want to see it lose any more ground here. If it does, I'll just kill it and be content with what I have. This candle's high gets taken out, the stop will go right below that low. I'm going to peel 2 off here just in case it is potentially failing, so I don't want to have it turn on me like it's likely doing here. Yep, let's close that here. It's good enough for government work. So you can see we had good grief, why are you moving from trading off of that fair value gap there. This wasn't the best of filling. All along, that's okay. And then here, it hit the fair value gap. I gave you another opportunity to see that that would be a live, well, recorded live and with commentary. That would rally above the short-term high here, there, and then 3 above the 39.85 level. So we got 39.85.5. Outlined where this is the consequent encroachment, midpoint of that buy side imbalance, sell side inefficiency. If it gave up that level, it would be problematic, and you can see it failing here. So I took partials again, 2 at 39.79 and even rather, and then finally killing the trade at 39.80.50, which would be again above the buy side liquidity pool here. So everything was accumulated in a discount and distributed above an old high in premium, even though it didn't get to my target. Notice that? So hopefully you found this insightful. And I've already shared this morning how I missed a trade. Didn't take a loss, but missed a trade entry, but it went right down to our level here and then rallied up. So this in here is enough for bread and butter type scenario. Hope you found it insightful. Till next time, be safe.